Well, financial analysts say it's still not clear exactly what the rating downgrade to Fannie Mae and Freddie Mac will mean for the housing market, but some homeowners in South Florida are already reacting. CBS 4's Maggie Newland talked to mortgage lenders about what they're seeing.
Most homeowners don't yet know what downgraded debt ratings will mean for their mortgages, but some aren't waiting to find out.
Our phones are ringing off the hook.
Isabel Taha of Coral Gables-based Home Financing Center says customers are rushing to refinance after learning about the lowered ratings.
That in combination with what happened to the Dow, I think that we're looking at another refi boom. Buyers are basically panicking in uncertainty, trying to figure out what's going to happen to the market.
She says customers worry if they don't refinance now, the rates will rise.
The downgrade of the new U.S. credit downgrade will definitely affect the mortgage rates.
The CEO of the Dade County Federal Credit Union disagrees.
The reality is that there isn't really going to be any kind of an impact. It's not really going to be affected by this situation because, to be quite honest, although there's been a downgrade, there really isn't anything better out there than the U.S. Treasury.
George Joseph says he hasn't seen a race to refinance at his credit union, but if homeowners are considering it, he suggests taking advantage of near record low rates.
Since rates right now on a 30-year are in the 4.5-point range, now would be the ideal time to refinance if you're going to.
I spoke with a national financial analyst from Bankrate.com. He said it's unclear whether or not mortgage rates will rise in response to these lower debt ratings. But he says it only takes a tiny increase in the mortgage rate to negate the effects of refinancing. And many people simply don't want to wait and risk it. In the newsroom, Maggie Newland, CBS 4 News.
Look for much more on the dive on Wall Street on the CBS Evening News with Scott Pelley. That's next at 6:30.